Hello traders, welcome back to the Forex Geek, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the diamond bottom formation, a powerful chart pattern that signals a potential bullish reversal at the end of a downtrend. Understanding this pattern can give you an edge in spotting trend changes early and making profitable trades. So stay with me until the end to explore how to identify this rare formation, discuss effective trading strategy and proven tips to enhance your trading success. Make sure you watch this video until the end to gain a valuable insight that can transform your trading approach. We first start by understanding the diamond bottom formation. The diamond bottom formation is a unique chart pattern that indicates a potential bullish reversal. This pattern typically appears after a sustained downtrend, signaling that the market may be ready to change direction. So this pattern significantly appears after a sustained downtrend. To understand the formation better, let's break down its key characteristics. First, the diamond pattern begins with a well-established downtrend, and as we can see in the chart, we are making a series of lower low, lower high, a lower low, a lower high, and a lower low, a lower high. We are making a downtrend, as we can see from this example. You will then notice that price have been declining for quite a while, creating a bearish sentiment in the market. As we can see, as the pattern develop, you will see a broadened phase. During this phase, price begins to make a higher high and a higher high and a lower low. And as you can see in this broadened phase, price begins to make a series of higher high and a series of lower low. This is a higher high and this is a higher low. This is a lower low and this is the higher high. As you can see, it made a series of lower low and higher high. Then this creates a widened range as buyers and sellers are struggling to gain control. Because of this lower low and higher high, shows that sellers and buyers are struggling to take control. The next phase in this pattern transitions into a contracting phase. In this phase, price starts to narrow down. As you can see, price is narrowing down, forming higher lows and higher lows and lower highs. As we can see, price is forming a higher low, a lower high, higher low, a lower high. As we can see, this is the formation which creates the diamond shape. This contradiction indicates that the market is becoming more indecisive, setting the stage for a potential breakout. As we can see, it is contracting in this area of the market. Another important aspect to consider is the volume. As we can see, the volume throughout the formation of the diamond pattern, you can typically observe decreasing volume. We can see during the formation there was a decrease in the volume chart. This decline indicates market indecision as traders weigh their option. However, once price breaks above the upper trend in the diamond shape, you should expect to see a significant spike in the volume. The moment we see price break above, this is the diamond pattern that I'm trying to talk about. When price make a series of a higher high and at the same time price makes a lower low at this area. After this thing, you see price, after these signs, you see price make a series of higher lows and lower highs. These are the areas where we see price making series of higher lows and lower highs, and we can see this forms our diamond pattern. This is the formation of the diamond pattern. So we expect price to break above this upper trend line because it's a reversal pattern. This is when we will decide to enter this trade. However, once price break above the upper trend line of the diamond shape, you should expect to see a significant spike in the volume, because as it breaks above, you can see there is a spike in the volume bar at this area. You will typically observe this spike in the volume. The increase confirms that buyers are stepping in and that the bullish trend may start at any moment. Identifying this pattern requires careful observation of price action and trend line, looking for four converging trend lines that form a diamond shape, as we can see from our chart. Two resistance, these are the two resistance and two support broadening phase. The broadening phase is the two resistance, while the contradicting phase is the two support. By recognizing these key elements of the diamond bottom formation, you can better prepare yourself for potential trading opportunities as arise in the market. So let's see how we can trade using this diamond bottom formation. Trading with the diamond bottom formation can be a rewarding strategy if you know how to approach it effectively. Here are some key steps you need to consider when trading this pattern. First of all, you start by considering your entry point. The first step is to identify the breakout. Once you have identified the breakout and see that price break above the upper trend line of the diamond shape, this is your signal to enter your long position. You confirm the breakout. This confirmed breakout indicates that buyers are gaining control, and it may be an excellent time to capitalize on the potential upward movement. When we decide to enter our trade after the breakout, you can look at the lower time frame to confirm the breakout, or to look for a retest of this area. As we can see, the breakout of the trend line, this is where price broke out from the trend line, and we will enter after the retest, breakout and retest. We enter at this area. We put our stop loss. To manage this trade, we have to put our stop loss below the recent swing low. To put our stop loss below the recent swing low, it can be this low, or you can put it at this low over here, in case you are willing to be more conservative. You can decide to put it at the lowest point, or you put it in the most recent swing low you can see at this area, as the case may be. Setting the stop loss help you to limit your losses. Setting a proper stop loss helps protect your capital while allowing you to stay in the trade in case it moves in your favor. Let's not forget, after setting your stop loss, we also need to set our take profit, our target price, which is measured the half of the height of the diamond pattern. You can decide to use the height of the diamond pattern for your profit target. You can target from the low here to the high of this pattern. This can be your target profit. You just put it from your entry. If you measure this thing, you put it from your entry. If you measure the heights rather, you put it from your entry to wherever you're expecting price to target. And as you can see, this was a profitable trade. So this is basically what the pattern is all about. And you have to project. Once you have measured, you have taken the measurement, you have to project your take profit. There are some additional tips we need to know when taking this trade. While trading the diamond bottom formation, consider using momentum indicators such as the stochastic oscillator or the relative strength indicator to confirm breakout. You can add little indicators to confirm your breakout. Secondly, it is also to avoid false breakout occurring. Indicators can help you to spot when the breakout might be a false breakout. Be patient and wait for the breakout signal before entering the trade. This is another tip. You must be patient for the breakout signal before taking a trade, because false breakout can occur. So confirming buyers are indeed stepping in your essential favor before you take the trade. Finally, always practice proper risk management by ensuring you have a favorable risk to reward ratio. This means that for every dollar you risk, aim for a return that is at least 2 or 3 times what you are willing to risk in the market. By following these steps and tips, you can effectively trade using the diamond bottom formation and enhance your trading strategy in the forex market. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, share and subscribe. Turn on your notification bell so that you would never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.